On Thursdays, Facebook Live on Thursdays. Hashtag Ask Tesharia Thursdays. Hashtag Ask Tesharia Thursdays. Hashtag Ask Tesharia Thursdays. Facebook Live on Thursdays. Hashtag Ask Tesharia Thursdays. Hashtag Ask Tesharia. Hashtag Ask Tesharia Thursdays. Facebook Live on Thursdays.
Hey there.
Hey, what's going on?
Nothing much. How are you?
I'm good.
Good. You hear me okay?
I can hear you just fine.
Perfect. I hear you too. So we're going to just let the audience build for a little bit and then we'll get right into it.
Okay.
All right.
Can I see some of my friends joining. This is the first time I'm doing this. Can they see that I'm live?
Yes.
Oh.
So it's going to pop up, like if anyone on your time, it will pop up on your timeline as well as your friend's timeline that you're tagged in a live video. Yep.
Oh,
So they'll be
okay.
able to see it. Yep,
Cool.
Yep. All right. Hey, Anna, welcome. I don't know if you'll be able to see. You should be able to see on your screen, like when people come in, most of them like your friends, so you can say hi to personalize them as well as you see their names pop up.
I just saw one. I don't see anyone else. So.
It's all good. Sometimes, hey, Kalisha, sometimes Facebook shows you individuals. Sometimes if like multiple people are coming in at one time, it doesn't. But hey, everybody, welcome to Ask Tesharia Thursdays. This is our season finale of season 4. So thank you guys for joining. As you come in, we love to personalize your greeting. So say hi. Hey, Marjorie, so that we can say hi to you back. I always say, and it's Ainka, right?
Ainka.
Ainka. I always say that people can be doing anything with their Thursday night, and so I'm appreciative that they're joining me. So I want to say personally, thank you guys. Hey, Jean.
Anytime.
Hey, Hurley.
And do I say Tesharia?
Yes.
Okay.
Yes.
Okay.
Yes.
Cool.
What's up, guys? So tonight we are talking about financial freedom with Ainka Munroe, our lovely guest. So in a few minutes, well, in about a minute, I'm going to do her bio. We will do our icebreaker and then get into the conversation.
Cool.
So thank you guys so much. Let's turn this up. Oh, All right.
What's up, Kalisha?
Hey. First time viewer, what's going on? Fellow therapist. All right. So again, guys, thank you guys so much for joining season 4 of Ask Tesharia Thursdays. Welcome, Anna from Hollywood. My name is Tesharia, and I'm the CEO as well as the creator of Ask Tesharia Thursdays, which is a show where we talk about real topics that other people probably don't want to touch on. And so this topic tonight is about finding my financial freedom. And one of the reasons why I wanted to do this episode, 1, it was requested from the viewers, and 2, I believe that a lot of content is forsaken by certain populations, and so why not provide it to them through a public forum like this? And so, Ainka, thank you so much for lending your time and your expertise to us. We really appreciate it. So, Ainka Munroe is a financial consultant with AXA Advisors, LLC, with over 10 years in financial services. She is dedicated to helping individuals and business owners build their financial futures through asset allocation strategies as well as risk management. In addition to the aforementioned, Ainka is also passionate about helping those within the special needs community. Maintaining a strong sense of community and a solid professional foundation are very important to Ainka. As a part of her social contribution, she is the co-founder of High Impact Alliance Incorporated, which is a nonprofit youth development organization.
Yep.
She also serves on the board of several service organizations, such as a life member of Zeta Phi Beta Sorority Incorporated, as well as National Association of Black Accountants. So shout out to the Zetas. In her spare time, Ainka also enjoys exercising, traveling, and spending quality time with her family and friends. And so if you would join me virtually in welcoming by hitting those heart and likes buttons, Ainka Munroe.
What's up, Rita? Thanks for joining.
And this is your first Facebook Live,
This is my first Facebook Live.
Yes.
This is okay. It's cool. It's cool. I see my friends are joining. I see my sorors are joining. I see my family. My cousin joined. So this is crazy. Wow.
Isn't it? It's nice.
Thanks for joining, guys.
And tell people where you're coming in from. Go ahead and tell them.
I am currently in Midtown Manhattan right now.
Yes.
I live in Brooklyn, New York. My family's from Trinidad. I'm live and direct from New York.
Nice. The Big Apple.
Yep.
So what I like to do before we get into the actual discussion is an engagement activity / an icebreaker, and it's normally something directly related to the topic. So I normally I'll post it, and then I'll ask you to share the answer to the question. Sounds good?
Yep.
All right, guys. So the icebreaker for tonight is, what was the biggest purchase you have ever made to date? Biggest purchase. And then we will go ahead. You can start, and I'll drop that question.
What's the biggest purchase I've made
thus far? Biggest guap you had to drop down.
I got my car for cheap. I don't own property. I have my investment accounts, which are pretty significant. But something tangible, right?
Something tangible.
Vacations don't count. Probably a piece of clothing.
Okay.
Spent, like $1,000 or so on a watch, and I've done that with jewelry.
Okay.
So that might be it. But
all right.
My biggest, it might just be my portfolio, my investment portfolio.
Nice. Okay, that's real financial.
It is real. It is.
I like that.
Yeah. I'm super cheap, guys. Super cheap. If you know me, you know I'm cheap.
All right, guys, y'all tune in with us. What has been the biggest purchase you have ever made to date? So Vincent Haywordsworth, a fellow New Yorker, he says a house.
Yep, that would be a big purchase.
Yeah, that's a real one. I think, and I'm still young in the game, so I'm learning from you gurus. But I think so far the biggest purchase I had, or amount of money that I had to spend on something, was college. I remember
someone said college here. I don't know if you could see their comments, but someone said their education. Yeah, that is. Yep, that's a big one.
Or my car. Yeah, it's true. I remember like working as a hostess at a restaurant. Like, I think I was getting like $8 an hour, and ended up saving like almost $2,000, and all of it went to tuition. Oh, hurtful, but yeah.
Yeah, I ended up paying off about $80,000 in college debt over a 5-year period. So that is a big commitment.
Yeah, a lot of people are saying. Rita says
children. These kids ain't loyal.
Not at all. Nice. Yeah, I imagine that would be a big purchase. Nice.
What's up, Mike?
Education. We have a lot of people that are saying education. My transmission costs way too much. Yes. Okay. Nice. Anybody else want to comment? What has been your biggest purchase to date?
Oh, someone said their daughter's cheap.
I didn't purchase her.
True. Yeah, over the course, the average kid costs about $300,000 over the time that you have them, for the 18 or 21 years.
Say that so one more time for those people that are like, oh, I have baby fever.
Yeah, it's about $300,000 for my kids need a job. Yes. It's about $300,000 cost to feed them if you want to send them to private school or whatever the case is. But the average cost is over time is about $300,000.
Let me go ahead and put that.
Maybe it might be a little bit less depending on the state that you're in. But child care, I think the average child care costs for, if you just had a child and you need a babysitter, that's about $2,000 a month to have a child to be taken care of.
Wow.
Oh, Gosselin family, what's up?
Schooling kids,
Hmm.
one on the way, and can't believe I didn't think of that before I got pregnant.
Yeah,
That's funny. Yeah, no, it's true. It's a big cost.
that's
Nice.
right.
So we don't I don't hear any like frivolous stuff. For the most part, they're very responsible answers. Education, investments, homes.
Travel is, I don't know if that's frivolous, but some trips can cost five to seven
Yeah.
thousand dollars if you go like to a completely different country, let's say Africa, and you do, like, I had a friend who did multiple countries over a 3-week period that I
Mm,
know probably cost $7,000 to $10,000 for them to do that, and it was a bucket list item, but that
nice.
was a big financial commitment. So
Yeah.
yeah.
We're going to talk a little bit later about like a frivolous. I have a question for you about frivolous spending, but I think that's responsible, especially,
Hmm.
I think self-care is good. So if
I
you
agree.
you go all out, it's good to go all out on vacation for
Yep.
sure.
Especially if you have the means and you have the ability to
Yes,
do it. So,
exact. There it is. That's important right there.
hmm,
Living in your means.
that's right.
Yes,
That's
yes,
that's the
yes.
foundation.
Yes. My 14-year-old's in private school now in Long Island, so the math is expensive.
Yes, it is.
That's
And
real.
if you go to private school, some in New
Whew.
York, maybe they give you financial aid, but even then, you're coming out of pocket between. It depends on the private school, but it might be $10,000 to $25,000 for private school in New York with financial aid,
Mm.
and that's not college. That is, junior high, high school, stuff like that.
Yeah.
Hmm.
Nice. And so before we get into, guys, I really wanted this conversation specifically to be audience centered. So if you have questions about like financial freedom or financial literacy, please throughout the conversation post them and we will address them throughout. So to begin, I thought it was interesting. So as a Black female in finance, what would be some of the obstacles that you've noticed throughout your journey, both culturally and socially, relating to
Uh,
financial freedom and
in my career as an advisor, or what I've seen with different demographics? In my
let's do
career,
let's do
let's do,
both.
okay. So different obstacles. There are definitely people who do not take you seriously. And I look fairly young. I'm going to be 36 in a couple weeks, but the impression is that I don't know the information.
Yeah.
So I get that when I'm in the room and you're sitting across, a corporate white male who
Yep.
makes a couple $100,000 a year, and you're trying to tell him about finances, they don't take you seriously. So I usually bring in a cushion, like another what we call a silver fox, another
Mm.
white male, to connect with the person. So that will allow me to actually close and get that person as a client. And in this industry, as a whole, I think there's one other Black woman in my company, but I am the only Black female advisor in my branch. I shouldn't
Mm.
say company, but in my New York office. You would think New York is the most diverse place, but not in finance. Finance, especially advisors, the population for Black women is 0.2%. So
Wow.
that's insane.
Wow.
So there is a barrier for us. There is a lack of connections, so people don't tend to open up to you, and they don't. I don't know if they don't trust you, but there's definitely some barriers in terms of being a Black woman.
Yeah.
We're not seen as the financial people, so that's definitely an issue. With clients, Black people definitely have different spending habits, and they I would say on a whole they're not used to saving, right? So,
Correct.
and with others, I would say usually there's an inheritance that's to be expected. Their family usually left them something, and they have some sort of habit in place.
Yes.
I had a colleague tell me, and she would sit in with Black people as well, and she was like, I don't understand how Black people have so much debt. Our family is not like that. We would never, Asians, and I'm being really biased, but it is what it is. But
Yeah.
Asian people tend to save, and debt is a hindrance to that. And she could not get her head around Black people having so much debt. And that's
Yes.
what I've seen with Black people most of the time. There's usually a lot of credit card debt, and there's usually whatever income that you get, whatever little excess, they use that excess to live lavishly. Like instead of buying, a lot of other people don't buy a BMW with an $80,000 salary, but a Black person would, and that's what I've seen. Those stereotypes are real, and I don't see it with everyone. There's definitely some people that are great savers, especially the Caribbean population. A lot of them are great savers, but a lot of us don't have the knowledge. So as soon as we see income, we tend to live the life that we've never had. We travel, we buy these items to keep up with the Joneses.
We doing
And
stuff for our
that,
family members. Oh, I
right.
got you.
Oh, that's another issue. A lot of Black people have a lot of other people outside of their immediate family to take care of.
Yes.
So they're, especially parents, they sacrifice for you, but you end up paying a bill here and there. You end up, doing things that hinder you from reaching your financial goals. So I've seen a lot of that.
Yeah, and I think the reason why opening up with this is so important is because the things the stressors that we have, or some of the environmental things that we go through, it's real. And so it does put us on a back burner, or trying to play catch up when it comes to financial literacy. And then a lot of us, I had just did a random question one day on Facebook, like how many of us, no, it was at an event I was at. I said, how many of us grew up understanding finances and with financial literacy? And nobody's hand went up. And it was mostly
Nobody.
African Americans in the community that I was in. So it's just like we learn this as adults, where we already have student
And that's
debt,
the
student
worst
loan.
place to learn, right?
Yes.
And student loan debt is a big issue for a lot of us. What I've seen with, I don't want to say white people, but non-Black people, is their family actually saved for them to go to college. They leverage other investments to make sure that they don't have that debt.
Yeah.
Usually, I just met with someone yesterday who has over $100,000 in student loan debt, and she's not making enough to cover that. I'm like,
Yeah.
sis, that's a
Yeah.
huge, like, you can't even save for retirement with that kind of debt.
Yes.
And we think that education is the gateway for success, but there's a huge price that we're paying for it that prevents us from succeeding financially, which is, a huge barrier.
Mm-hmm. Very much true. Very much true. So in that same vein, then, how would you say we change it? So we know that we already learning way later than in the game. Like, what is the preventative measure into changing this generational plight, if you will, about ignorance financially?
Well, I'm part of NABA, and we have a financial literacy committee. That committee is dedicated to educating youth on budgeting and savings and things like that. So I would say the earlier you're able to get access to finance, I personally believe every college graduate should have a financial literacy course to graduate. Some HBCUs, they take swimming classes to graduate. There should be a mandatory finance class. But those of us who are already in the mix, I just saw a post of someone who said they have 2 kids and they don't
wanting to
know where
budget.
to start. the earlier you're able to start and get that income is where you need to start. You need to have the ability to budget, assess your cash flow, and then from there take money away from yourself, and whatever's left is what you have to adjust your lifestyle to. So most people aren't willing to sit and do the work to create a simple budget. Where is my money going? How much am I paying for rent? How much am I paying for maybe vacations per year, gifts to family? All of that needs to be in this budget. And then from there, you have to backtrack and say, this is my income. What do I need to sacrifice so that I can save at least 10% of my income somewhere? Because that's at least the minimum you would need to do, is save 10%. Most people are living, paycheck to paycheck, but you have to first decide, yes, I'm living paycheck to paycheck, but I have to change. So once you realize you have to change, then you need to understand that there's work that's required. Yeah. I need to sit down, I need to create a budget, I need to know where my money's going, and then from there you would have to do some things to sacrifice so that you can be able to retire on time.
Mm-hmm. And I think a lot of times, and I know there's another question we'll get to from the viewers, a lot of times what I've seen is people think of a budget meaning like you don't have, or you're you don't have the means, but that's totally opposite. Just because you have a budget, or you say, I'm unable to do that, that's healthy financial boundaries. And I think we just need to train our mind to see it that way versus seeing it as, people are going to think I don't have. First of all, your money is your money, and no one else should have to tell you how to spend it or how not to spend it.
Right. And there's a book called The Millionaire Next Door. And essentially it says the people with the most money look the brokest. Yeah. I have teachers who are clients who are millionaires. And I have people who are in corporate America that cannot save, keeping up with the Joneses. They live frugally. They don't buy lunch every day. They got that Honda. They don't got that BMW. And they're retiring with $1 million in their account. And they've never made more than $80,000, $90,000 a year their entire life. Wow. So if they can do it, and some of them have families, if they can do it, then you can too.
Yes. Yeah, it's feasible.
Thanks for sharing that link.
Yes, for sure. And someone asked what the NABA was, so I made sure I put that as well.
National Association of Black Accountants. I worked at Deloitte, was my first career as an auditor for 4.5 years. So I was in the accounting realm. My degree is in accounting, so I aligned with that organization. The people are amazing, and we do a lot of great work. So
nice.
Yeah.
Raquel says, "Yay for the Honda drivers! Shout out to Hondas and AXA."
Word. So this Toyota, shout out to all them cars.
Yes.
They'll get you to the same place. So.
Yeah, exactly. So Shauna said earlier, she's really trying to find her financial freedom so she can take a real vacation. What advice would you have for her?
So people that are starting out, I usually tell them to take money from themselves. So most people have a savings and a checking account, and they have it at the same bank, right? So they say, I'm going to save, I'm going to put money away, and they end up transferring money to their checking account, and then they lose sight of the goal of savings. Yep. So one of the things that I tell people to do initially, everyone in this thing should do it. You need to open up a separate account away from you. It can be an online savings account. It can be a credit union, which a lot of people do because you have to actually go to the bank to get the money. And then you need to direct deposit. So right now, if you have one direct deposit going into your checking account, have a second direct deposit going into that other account. If you don't have any savings, I would say start with 10%, and then you can adjust up or down from there. Start with 10% for a couple months, see how you're feeling, and then I'm going to adjust up or down from there. That's the basics. You have to do that.
That's good. That is really good. Yeah, because a lot of us are, it's like 101 because we are not financially disciplined. So having those two accounts together it's a recipe for
Yes.
failure.
Having those two accounts, having that magic card to swipe, it'll get you in a lot of trouble.
Yeah.
So you guys got to set up a separate account. You guys need to do it by next week.
Good. Raquel says, yes, that goes straight into that account. I have that at my credit account straight from my check. It's growing too. Thanks for saying that.
Yep. That's the basics, man. You need an emergency savings. You need
Yeah.
something in case something happens, and then it's a wrap. You don't want to use your credit cards that are
Yes.
charging you 20+%.
Mm-hmm.
It's not the way to go.
And just really quickly, guys, especially if you're a minority on here, I would ask, can you share this broadcast, because we want to make sure we're getting content to those who really need it. And so please, if you find this content to be beneficial, please share it so that other people on your feeds can get it while we're live. We want to impact as many people as possible. So thank you guys so much.
Yes. I saw someone ask about Stash. I'm not
Yes.
familiar with the different savings accounts. Every couple of months something pops up, but and I know there's some app that where they take your change and then they save it for you.
Yeah.
But I don't think that's the way to go. I don't think you should start there. It may help you on the back end, but those accounts, I believe that there's hidden fees associated with those accounts. So it's not really beneficial for you. I'd go to an FDIC insured account. Marcus is an online account by Goldman Sachs. Ally is another online account. American Express. These are all high yield savings accounts. I would start there. All these little apps, I'm not a fan. And then you end up dipping into it. I don't know. I don't know about Stash, but it might work for you, but I'm not familiar.
Personally, yeah. Yeah, and
Yeah,
I did hear about some of those apps that will automatically, like, you spend a certain amount and they'll take some of the change.
Yes. Yep.
I recently heard about that. Thank you guys so much for sharing. I appreciate it. I think the only way that we can connect, impact community is for together. So I appreciate you guys' help with visibility. Excuse me. Cool. I want to make sure I didn't miss any questions. So for those people, because I think the reality is a lot of us, like, we're carrying our families on our back, not just our immediate families, but, you know, extended family members, or we're trying to undo some poor choices that we may have had to make because of poverty or other types of issues. So then for those individuals that feel like, you know, they have a college degree, they may be making a good salary, they want to start saving, but they have their family members that they're looking to, like, how would you encourage them to,
Oh, that's a
what do you
tough
do?
one. That's a tough one. You know, what do people say? You can't pour from an empty cup. You need to protect yourself first. You got to incorporate the word no in your vocabulary.
Oh man.
And you have to limit how much resources you're going to give away, because that's how we end up in this cycle. We tend to sacrifice for others when we have a little bit, and then we're screwed down the line. That happens. That's a generational thing.
Yeah.
And you have to maybe commit, this is how much money I'm going to give to my family, and that's it. If you need to, you can have a separate account, which I know a couple people have separate accounts for their family. And once that's zeroed out, it's done. But you got to say no. You got to say no. You got things you need to do. You got to retire. You got to, take care of yourself. You got to go on vacation.
Live your best life. Exactly.
You got to live your best life. And you need your sanity too.
Yeah.
So, and family, if you give them an inch, they'll take a mile. You can't have that.
Yeah. So
Boundaries.
good
That's
boundaries.
right.
Yeah. It's true. And I'll share. I'm one of 11, and
Oh.
not 8 of my siblings are younger than me. So I have that, and
Mm,
I'm young. I'm trying to make
that's
sure I'm
tough.
living my life, but making sure that they're also okay because of, family dynamics. So it is challenging. And I've struggled with this like all of my college years, where it's like, I'm trying to come up, but I have literally, it's like I have 8 kids,
Yes,
so
that's hard for,
it's a real one. It's
yeah.
hard. Survivor's guilt. I'm
I,
like,
I'm
man.
I'm I'm a bit of a jerk. I'd say move,
So
move to a different state.
So I currently live in a different city than my
Oh, you
siblings, which is
do? Oh,
challenging. Yeah. And
okay.
I struggle with going back home, but I sometimes I'm like, God, you know what? This is you, because I'd be stressed, very stressed.
Stress is, yes. Your family will drain you as soon, because you're on the come up, right? And you're first in your family or whatever, and they will see you as a millionaire,
Yes.
and then they will pick at you. But they don't understand that you're the sacrifices that you're making, and you have to tell them no. You have to, like, I ain't got it, sis. I
Yeah.
ain't got it. Here's $20. I'll see you next month. That's
Right.
it. That's all I got.
Yeah. And then being okay with, with that, like whatever your boundaries is, like being firm and being okay. And eventually they will respect
Nathan.
it.
Yeah.
Hey, they'll respect it.
What's
So
up,
yeah,
Nate? Sorry, I haven't seen a lot of these
you're
people that are
good. That's
on
dope.
for a long time. So what's up, guys?
Raquel says,
Um,
I'm a master at saying no, have to or won't be able to save a dime. It's true.
your sanity is important. The stress is physical. It will harm you. Your health is important. You have to, tell people no.
It's a tough one. But yeah, no is a
It
complete
is a
statement.
tough. Yeah. Yeah.
That's real. Guys, any more questions? Any more live questions for you guys? So we talked a little bit about like tracking spending and how necessary it is. That was one thing I wanted to capitalize on, because I think a lot of us do not do not track our spending.
Mm-hmm.
Um,
Yes.
go ahead.
Oh, you want to be okay. So, like I told you before, for me, I tend to put money in different accounts, and whatever's left is what I'm going to work with. So I don't necessarily need to track spending, because I've already given myself a budget
Got it.
that if it's done, it's done. But some people use different apps that work for them. There's an app called You Need a Budget that I've heard some clients say really work for them. Mint works for a lot of people. Sometimes it doesn't work for some, but there are different apps that force you to track your spending. And then over the course of a couple months, you can look back and review and say, hey, this is where my money's going, and then take the money away. So I would, in this instance, I would use different apps. But I usually help people manage money and things like that. So if they're not at that point, sometimes getting a financial coach would
Yes.
help them. So I've referred a couple financial coaches to people, and then once they've gotten on track, then they're able to come to me so that I can help them manage their assets that they've built.
What would you say to the person that may have that mindset, like, I can't afford a financial coach? Like, why would I pay somebody else to teach me how to deal with my money? I'm good. Like, what would you say to that person?
If so, you're good, but you're still broke, right? So
Right.
if you are doing it on your own and it's not helping, you have to make a decision, like, I need to get my life together, and I'm going to pay a small sacrifice for these coaches to reap the gain in the future. I've seen people be successful with getting coaches. I'm not sure if, a lot of people listen to they read, these books, they listen to Dave Ramsey, which is great. But if you're not implementing these recommendations that these people are giving, then you need some accountability.
Yep.
So that's where, someone said Roth IRA. You could talk a little bit about that. But I send them to financial coaches to get their act together and I've seen some people with some success. So
Okay. Couple questions on the board now. That's really good. Thank you.
use the app every dollar. Okay.
Oh, okay. Marjorie had a question. So she says, this is very important
That's good.
information right now. And this topic came up regarding her and her siblings with preparing for their mom when the time comes. So what percentage would be best in the case as far as saving for that time?
For like burial for your parents?
Or maybe even, that, or maybe retirement. I'm not sure which aspect we're talking about.
So that's another sacrifice you have to make for a parent. There's tons of layers to that question. You need to find out what stage that parent is in. Will they need home care? Are you gonna, is there a power of attorney? That before they get to, the final stage, what are the stages in between? Do they have, am I gonna pay for rent? Am I going to pay for, long-term care, elder care? Do they have assets that I need to protect? Do they have a home that's going to go to the family if there's a home or if there's assets? That's another issue because those assets need to be protected years in advance before the person becomes disabled or the elder person needs care. And then once that stage happens, you have to find out every piece of asset that they have. I give clients a family love letter, and they can walk through that with their parent, find out, where the safe deposit box is, find out, what the passwords are for things like that. So all of that, so it's a layered question. And it really depends on what they want to do for the parent, what stage the parent's in. If the parent has assets, if they don't have any assets, where they're located. I mean, I could just go on and on with that, but it's a layered question. So that's at the point where you need to see a financial professional.
I agree.
And a lawyer.
True. And just to touch on that from the mental health or clinical perspective, I see that unfolding a lot when I used to work in palliative and hospice care. And the biggest thing with that is people have to be open. So if it's your mother, father, whatever, they have to be very open about what's going on so that you know how to move forward. And a lot of times, especially in African American communities, we're so I guess protective, or we don't want to be honest about our finances, but it's so important in conversations like these. So
that's facts. That's facts. Older people don't want to tell you nothing.
No, they think you're gonna take their money.
Yes, but even if they don't have anything, it paralyzes the family. They don't know where to go. Like you just, and then brothers think they're gonna live forever, and something happens and the family is screwed because the father or whoever didn't tell their family where to go, what things were. They just I've heard people say, they'll figure it out. That's the worst thing you can do for a family member. Leave them with that.
Especially when in that grieving process. So we have to be more preventative as a culture, guys, for sure. Anna asked about IRAs and 401ks. Should we invest? Do we need them? What are your thoughts on that?
Yes, you should invest in IRAs, 401ks, Roth IRAs. All of these have tax benefits associated with it. When you're at a company, typically there is a retirement account, 401k, 403b, 457, TDA, whatever the account is. You should be participating in that account through work. Once you leave, which the younger generation, they leave jobs fairly often. So once you leave, you can transfer that into an IRA. An IRA gives you more flexibility, it gives you more options, and there's more beneficiary options as well. There's a difference between a IRA and a Roth IRA. IRAs in general also has a benefit where you can use a portion of the IRA for first-time home buyers.
Okay.
Roth IRA is great because it's after-tax dollars. You've already paid taxes on the money you're contributing to the Roth IRA. The tax benefit is years down the line, you're not paying any taxes on the money that you made in the account. So that, I think, if you have the ability to do that, you need to open up a Roth IRA yesterday. The issue is there's income limits when you make us over a certain amount of money that you can't participate in a Roth IRA. And then there's other investment vehicles that you would use in the instance you can't do that, which is another layered question, which you would seek a financial professional about.
Got it. I had a question regarding finances for people that are single and then those that are in a committed relationship or marriage. What are some of the things that people should be focused on financially while single and then while in a marriage?
While single, it's great because you can save a lot of money. You don't have any obligations. Your obligation is usually, your student loans, the rent or the home you purchase. So you can save a ton, which I would recommend that you do. There's other things like if you are young, or not if you're young, but if you're older, there's other things that you need to worry about. Risk management, which I know you had a question about that. You're gonna be single, and you may potentially be single for the rest of your life. So there's certain things that you need to do in place so that you can ensure your assets are protected, your wealth get transferred properly, and your since it's just you need to do a little bit different protection strategies than someone who has a family and has someone to pass on not debt, but assets to, pass on wealth to, pass on, a proper will and estate planning strategies is different. But single, ready to mingle, you should be saving. You should be, if you have the means, you can enjoy your life, travel a little bit. But I would think that someone who's single should save well over 20+% in assets, in the income that they're generating.
Okay.
Save like 20+%. You don't have that many obligations.
Right.
And whatever is left is what you're going to be using to travel and enjoy life with.
So then let's flip it. So those that are
married
and have a family, what are some of the things that they should be doing financially?
That's a loaded question because there's some married couples who like to keep their finances separate. There are some who've built their finances together. Finances are the number one reason for divorce, right?
Yeah.
So as soon as they're in the planning stage to get married, they should seek professional guidance, because I think that there should be joint assets. I think both parties should know each other's financial flow, because oftentimes with a family structure, sometimes the male is making more than the woman.
Yeah.
And the woman doesn't know anything. And I've seen this in divorce. When there's a divorce, the women are screwed because they thought their husband had it. They get a little stipend from their husband, and now they don't have anything. And now they have to rebuild their entire lives. If they're living in a nice house and the husband left, how are you going to pay for that house? How are you going to pay for your kids' education? Obviously, there's child support. Maybe there's alimony, but that may not be enough. So communication, knowing your flow both ways is key. Combining assets. Am I going to send a child to private school? How is that going to look? But yeah,
go ahead. I'm so sorry.
I was going to say, yes, I think that was Rita, but I typically recommend married couples set up a joint account where all of their finances come from. Rent, phone, car, majority of household expenses has to come from that joint account. And everything in excess, you can keep it in your separate accounts. You can do your girls' trip. You can, do whatever on the side, but everything else flows into that joint account. Like some couples say, I'm going to pay, half the rent, or I'm going to pay the phone bill. I don't think that's the right way to do it. I actually think that both couples should contribute a percentage of their assets. Some people contribute a dollar amount, but the dollar amount may not be even. One person may make 100,000, one person may make 50. So if they're both contributing the same amount, it doesn't balance out. They need to contribute a percentage. The percentage is the balance, whether it's 90%, whether it's 50, and that joint account will solve, a lot of people's problems.
Yeah, there are a couple questions. So we'll start with Marjorie. I like your last question because I think it goes. So we can in our community, we know that it's not like the one mother, one father, and the kids together. That that.
Oh, that's
that's the reality. So what do you do about those couples that are together but unmarried, or that may have kids with other people? That's when it gets muddy.
That's another, I still think a joint account should be there, but that's another issue because marriage is a legal partnership.
Yes, it is.
You get a ton of benefits from marriage. If you're separate and something happens to one, you don't have access to any of their investments. You don't know anything about their situation. Even if you do know about the other person's situation, you're not married, so you're not going to get access to it. And then if you go through the courts will likely, say, no, you can't get anything. The kids will get it. But then the issue is the kids are young. They can't access the money till they're 18. But you need to make sure that the person that they get to 18. Mm-hmm. So if they're, a couple, then they need to, like I said before, I think they still need to have some sort of joint account where the household income comes from. But they also need to put each other on all of their accounts. If they don't like the idea of marriage, just make sure that every account has the other person's name on it. And then you'll need some wills and some trust planning, and it can get layered from there because you don't have the legal partnership of a marriage.
Yeah. It's true. And I just posted about this is why it's important for us to be intentional about, starting a family and the amount of kids that we want practically, because there's so many dynamics just other than just, oh, I love you, or kids are cute, so it's so important.
Agreed.
Let's get to these questions. So let me go back up. Raquel had a question. She said, I closed out a retirement plan for the down payment to purchase our house.
Oh, okay. Mm-hmm.
Working now to build it back up. I look at it as an investment. What would you say about that?
It's good I would say the retirement account should be a last resort because you're technically borrowing from your future retirement that you now have to catch up on. But there are benefits to using an IRA versus a 401k to use a part of it for first-time home buyers. So I think that's fine, but you need to then go back to the basics. What is my budget? What is my cash flow? And how much can I save? You need to be more aggressive now because you took money from your retirement to purchase this home. So I would say you would need to increase your contributions to your retirement account. You may need to substitute what you're doing in your retirement account for an investment account, but you need to reassess what your cash flow is first, and then figure out how much you can save, and then go from there.
Nice. Ernell asks, I just started a new job but won't be able to participate in the 401k program for a year. What should I do with my current 401k?
You can, for your current 401k, you can talk to a professional about that. I would recommend that you roll it over to an IRA, and the IRA, what I've seen with people is they just open up an IRA on their own and they just transfer the money in there, but they don't know how to invest it. So it's imperative that you talk to someone on how to invest it. But I